Happy New Year, everybody. Today is January 6, 2018. Welcome to another episode of Trading the Price. This is the first episode for the new year 2018. Just a disclaimer, the contents in this video are for educational purposes only. They are not investment advice and use them at your own risk. And also, I will be discussing a couple trade ideas for Apple and Tesla in this video, and it's involve option. So make sure you understand the risks involved in trading options, and before you start considering trading these instruments. So with that all said, let's go and take a look at Apple. Here I have Apple's daily price chart here, and as you can see, Apple has been sort of consolidating within this range here, right? Or if you take a look back, a little bit of a closer look is more of this area here. So somewhere around the 169, 168 to this 176, 175 zone. Right? And right now, I'm basically looking at Apple for the possibility of breaking out of this trading range. Right? It's essentially been bouncing off of this trading range. Of course, there's a possibility that it could bounce against this zone here, this price zone, and move back down to the lower boundary of this trading range. But the thing that I'm looking at is essentially to have that have Apple break out of this zone. Okay, this trading range, and possibly move up to a major move of 184, and this major move is essentially this particular swing here, right, to this area here. Okay, so that's the major move 184, and what I'm looking at is essentially to play the breakout of this thing. I'm not even trying to play it up to this 184. I'm basically looking for a quick pop to maybe to this 180 and then come back down, and then retest this breakout area, and then make a move to the 184 and try to do that major move. And that's basically the trade that I'm looking at. And also, for the possibility of coming back down, I essentially have a stop somewhere around in the middle of here, depending on what how much we're willing to risk here. So and the trade involved what we call a buy right type of option strategy, but a little bit of a twist going there. And let me explain, and let me put that option trade up. And here it is. I'm using Tastyworks web platform to illustrate this. So let me take this down here, and let me start off with looking at Apple. Okay, and so let me scroll back up. Here's Apple, and essentially using this just kind of illustrate using the table version first, and kind of let you know what I'm doing here. I'm essentially using the January 26 expiration option. And the reason I chose that is because I want to get ahead of the Apple earning report. I believe it is scheduled to for January 29, I believe. So I definitely want to be ahead of that. I don't want to hold this trade into earning, and don't want to put a trade on a week of earning because of the the inflated implied volatility. So essentially what I'm doing is I'm buying 175 call and selling 2, okay, the 172 and a half, 160 put spread to basically finance this call that I'm purchasing. And also sort of limit the risk here, okay, the downside risk to the spread of this put call. I mean this put spread, and essentially I'm just trying to find some level where I could still get a credit, and essentially give a decent protection on the downside, just in case some black swan effect happen overnight or something like that, and then stock, Apple stock really got clobbered and broke down. Then at least I limit this to the width of the spread, on for the downside. Essentially, I'm also using it to minimize the amount of capital outlay to put on this trade because of the margin requirement. So that's basically what I'm doing. And here, let's go to the the little bit of a graphical version. Okay, so here's it. I'm essentially getting a 7 cents credit, and I'm going to try to work that. I don't have any of these trades that I'm discussing today on as this moment, and I might not even have them on next week depending on the price action. Okay, so right now I'm just basically looking at it on a hypothetical basis to say, if I was going to do this and that, what would I do? Okay, and that's basically the come up with these couple trade ideas, and this one for Apple, right? So essentially, buying the 175 call, right, for 278, the January 26th, and selling, two 172 and a half put at 165 each, and then buying the buy two of the 160 put for somewhere around 23 cents or so, okay. And that's basically, this is the put spread, and I'm doing a ratio of 2 to 1, right? Because I basically want to have enough premium that I collected selling this put spread to cover the cost of the call. And right now the mid is sitting at 12, and so I guess Tasty Workers using the the lower and the mid, and sort of calculate the minimum, the middle of that thing, and use that. I have no idea how I come up with 7 cents credit here, but for now we essentially just go with that as for illustration purposes. Okay, and again, so this trade, if the price at expiration sitting between 172 and a half and 175, then won't lose any money here, and keep the 7 cents credit. But as price approach and get below 172 and a half, when it's near the expiration, then this trade will incur losses. And again, I'm not gonna wait until it come all the way down to hit that max loss. Probably when it start going against me somewhere around in this area, probably take a look at to close out the trade and take a small hit and move on. So here's the stat here. Essentially, max loss is 24.93. Essentially, it's 2,500 minus the the 7 cents that got credit, that got collected, or the $7. Okay, and then here's the what's that? The maximum profit is undefined. Okay, right, and the IV rank is 68, and the probability of profit is 63%. So which is not bad, right? Okay, so it's better than 50. Alright, so that's basically the Apple trade. Is we're gonna buy. Essentially, it's at the money because I think the price of Apple closed at 175 on Friday. Yeah, essentially they just pinned that thing at 175 for last week's OPEX. Okay, and it's selling two of the 172 and a half, 160 put vertical. Okay. And that's basically the trade for Apple. And now we're going to take a look at Tesla. All right. So looking at Tesla, let me, and we can see Tesla has been coming up, right? And came down and sort of make a little bit of a double top here, right? Okay, and I made a little double top, came down, and then now getting a little bounce, and essentially bouncing back up close to 50% of this swing, and now it's coming back down. But also again, if you take a look at this area here, right? Here's the baseline or the neckline of a head and shoulder pattern, and this head and shoulder pattern basically got played out because it came down. right? And did a major move and then come back up. Okay, so now I'm looking at a possible bigger, right, head and shoulder pattern, right? This one here. Okay, and that's basically what I'm looking at on setting up the trade. Is a bearish trade on Tesla. I'm looking for the price to come down to this, this basically this baseline here, this neckline, okay, near the 295 and 290, right? Looking at for it to come down and test this price zone to see would it break down and play this head and shoulder pattern out. And if it does, then essentially if you do a major move, then it could come all the way down below $200, right, if we do that. But what I'm really looking at is for this thing to break down and come down to this 290, 295. And what I'm going to do is I want to buy a 315 put, right? So that give me a $20 swing, $20 move here from here if it come down, right? So let's take a look at that option trade. Okay, again, we're going to go back to the Tasty Work platform, and let me change this and put up Tesla. Okay, so here is what I set up. Okay, what we're going to do is I'm going to buy. First of all, I'm using the February 16 expiration. And again, the reason is same as Apple, because I want to get in front of the earning. I did not want to carry a trade into earning or buy option at the week of earning. Okay, that has expiration on the week of earning because of the implied volatility inflated dramatically, and that kind of put havoc on these kind of trade. All right, so so here's what I'm doing. I'm going to buy one 315 put, okay, with 41 days to expiration for basically 1427, 1428, and I'm going to sell two call spread, okay, the 330, 365 call spread, right, for a net credit of 22 cents. Okay, so if the price for Tesla close between 315 and 330 at expiration, I'm just going to keep this 22 cents credit. But if the price approach 330 and then move above that, then we start incurring losses on this trade. Then of course I'm going to close it out before it come down to this max loss, right? And if the price of Tesla go below 315, then we start making additional profit here as it moves down. And again, basically looking at the 295, 290. So I'm looking at a possible move of $20 to $25 intrinsic value. So essentially putting on a trade to collect 22 cents with a possibility of making $20 to $25. Right? But again, there's risk involved. It is not that simple. And if we look at this, the max loss, okay, could be $7,000, near $7,000. But of course, I'm not gonna wait until it get down or get above that to that 360 before I close out the trade. So I'm gonna manage this trade if it go against me and just take a small hit and move on if the trade start going against me. Okay, so that's basically the trade, and the probability of profit is 63%. Okay, all right, so that's the trade for Tesla. Hope you found this video useful and informative. It presents a couple different ideas, with certain option strategy that you might want to study on or maybe apply on your other trade or whatever. But please click on the thumbs up if you like this video and you find it useful and informative, because that gives me a feedback that I know that that you are finding it useful, and it also encourages me to continue to make these videos. And if you're not a subscriber on my YouTube video channel, click on the subscribe button on the lower right hand corner here on the video and subscribe to my YouTube channel. And also you can follow me at Twitter. My handle is smtraderCA. So thank you for watching and have a great weekend.